As we check the live market feed, Strive Inc., trading under the ticker ASST, is currently sitting at a price of $1.245 per share, experiencing a significant intraday drop of 3.488%. Now, for many investors, the name Strive Inc. rings a very specific bell. The general belief, the expectation, is that this is the anti-ESG asset manager, the firm co-founded by Vivek Ramaswamy as a direct challenge to the large-scale firms pushing stakeholder capitalism. The expectation is that you're investing in a financial firm built on a political and social counter-narrative, one that promises to put shareholder primacy back on the throne. But the reality of what ASST is today, right now, is something else entirely. If you are holding this stock thinking you're just in an anti-woke fund manager, you are missing the entire story. Because this company has undergone one of the most significant strategic pivots of the year. Just 2 months ago, in September 2025, Strive completed a merger with a company called ASST Entities. In doing so, it completely changed its corporate identity. Strive Inc. is now, by its own definition, the first publicly traded asset management Bitcoin Treasury Corporation. Its new corporate mission is no longer just about proxy voting. Its primary objectives are now to accumulate Bitcoin, to increase the amount of Bitcoin held per outstanding share, and to try and outperform Bitcoin itself over the long run. This is a fundamental, ground-up shift. The asset management arm that manages over $2 billion still exists, but the parent company, the one you are buying on the NASDAQ, is now a leveraged bet on a single digital asset. This isn't just a different angle, it's a different vehicle entirely. The tension between what this company was and what it has become is where the entire risk and opportunity now lies. Let's look at the movement, because it has been incredibly volatile. The stock has a 52-week range that stretches from a low of 34 cents to a high of 13.42. That is not the chart of a stable asset manager. It is the chart of a high-growth, high-risk speculative play. And the recent news flow confirms this new identity. Just 3 days ago, on November 10th, Strive announced it had closed an upsized initial public offering not of its common stock, but of a new class of perpetual preferred stock, which trades under the ticker SATA. They raised $160 million in this offering, and the company was explicit about why. This new capital is earmarked for purchasing more Bitcoin, and it was raised this way specifically to avoid diluting the common ASST shareholders. This is a sophisticated and aggressive financial maneuver. They are using debt-like instruments to lever up their treasury. As of that announcement, Strive now holds 7,525 Bitcoin. We also know from recent filings they just acquired 1,567 of those coins at an average price of over $103,000. This is where the reality of the balance sheet crashes into the expectation of the Bitcoin story. While Strive is successfully raising hundreds of millions of dollars and buying digital assets, its core operational financials, based on the last public filings, are, to put it mildly, terrifying. The most recent quarterly data from before the merger's full consolidation showed quarterly revenue of only $1.47 million against a net loss of $6.31 million. Other data points floating around paint an even starker picture, suggesting post-merger expenses and acquisition costs have led to massive net losses. The company's profit margin was last reported at a negative 430%. This is the central conflict for any investor in ASST. You are betting that the appreciation of their Bitcoin holdings will so dramatically outpace their operational cash burn that the underlying business fundamentals become irrelevant. It is a race against time, a bet that the value of their treasury inflates faster than their operational costs can deflate their cash reserves. This brings us to the short sellers. This stock is a magnet for them. With a beta reported at an astronomical 17.4, this stock moves with wild, amplified swings, making it a perfect target. While we don't have the exact short interest percentage in front of us, the short thesis writes itself. A skeptic would say this is a company with negligible revenue, hundreds of millions in losses, and a share structure that is, frankly, alarming. They would point to a recent prospectus filed for the potential resale of up to 1.28 billion shares of Class A common stock by certain security holders. Let me repeat that, 1.28 billion shares. With only around 614 million shares currently outstanding, this represents a potential supply overhang of monumental proportions. Short sellers see this filing and view it as a massive, looming cloud of potential dilution, a sign that early investors and insiders could be preparing to dump shares on the market. They are betting that the company's operational losses will force it to sell its Bitcoin treasury or worse, issue more stock, crushing the price. What's your take on the rising short interest, smart money or manipulation? The short thesis is that the fundamentals are disconnected from reality, that the tiny revenue cannot support the massive Bitcoin bet, and the 1.28 billion share resale filing is the kiss of death. The counterargument, the long thesis, is that the shorts are missing the point. The bulls will tell you that the SEDA preferred stock offering was a genius move precisely because it allows Strive to raise capital without selling common stock, funding its Bitcoin acquisition strategy. They will argue that the 1.28 billion share filing is a standard, all-encompassing shelf registration following a complex merger, and that those shares may never actually be sold. For those of you watching this, it's critical you understand how to navigate this. You need to be looking at the short interest data yourself. You can find this on platforms like Fintel or Ortex, which track this data. You are looking for two key numbers, the short interest as a percentage of the float and the cost to borrow rate. If that borrow rate is high or spiking, it means the demand to short ASST is intense and the available shares to borrow are scarce. That confirms the shorts are paying a premium to bet against the stock. But it can also be the fuel for a short squeeze if the price of Bitcoin moves sharply higher and forces them to cover. This division is reflected perfectly in the retail community. On forums like Reddit, you have two distinct camps. One group sees this as a long-term play, a regulated on-ramp for institutions and retirement accounts that are legally barred from buying Bitcoin directly. They see Strive as providing a service, a wrapper that allows for traditional equity exposure to the digital asset, and they view the Bitcoin purchases as aggressive, confident execution of this new strategy. Then you have the other side. This group is extremely skeptical. They point to Vivek Ramaswamy's involvement as a red flag, calling the company a rug pull in waiting. They see the chatter online not as organic interest, but as a coordinated distraction. Their advice is uniform: get in quick and get out faster. They believe there is no us or team movement, only a highly speculative trade that could collapse the moment the hype fades or those 1.28 billion shares start to hit the market. So what does Strive Inc. actually do? It was founded in 2022 with a clear mission to compete with the world's largest asset managers like BlackRock and Vanguard, but from an opposing ideological point of view. Its entire brand was built on excellence capitalism, a promise to use its proxy votes to force companies to focus only on profit and performance, not on social, political, or environmental, social, and governance, or ESG, goals. It launched a series of ETFs that mirrored popular index funds but came with this new proxy voting promise. This is what the market knew the company as. But that company effectively no longer exists. The merger with asset entities and the pivot to a Bitcoin Treasury Corporation means its old business model is now just one part of a much larger and completely different corporate strategy. It is now, first and foremost, a company that buys and holds Bitcoin. Its success or failure is now almost entirely pegged to the price of Bitcoin. Looking forward, the path for ASST is binary. In one scenario, the price of Bitcoin continues its upward trend. Strive is able to use its new SEDA preferred stock to continue acquiring more Bitcoin, leveraging its balance sheet without diluting the common stock. As its Bitcoin treasury swells in value, the market begins to price ASST as a true Bitcoin proxy, and the stock's price decouples from its weak operational revenue, trading instead at a premium to its net asset value. The 1.28 billion share overhang is slowly absorbed by new institutional demand, and the shorts are forced to cover, creating a massive squeeze. That is the bull case. The bear case is just as stark. Bitcoin chops sideways or enters a bear market. The $160 million raised from the SETA stock is spent, but the value of the treasury stagnates. Meanwhile, the company's operational losses continue to bleed cash quarter after quarter. The market looks at the negative 430% profit margin and decides the company is insolvent. The 1.28 billion share registration lingers, freezing any new buyers from stepping in as they fear a deluge of new supply. Short sellers increase their positions and the cost-to-borrow rate skyrockets. The company is eventually forced to choose between selling its Bitcoin at a loss to fund operations or diluting the 614 million existing shares, confirming the short thesis and sending the stock back to its 52-week lows. This is the ultimate expression of expectation versus reality. The expectation was an asset manager with a political angle. The reality is a highly leveraged, high burn rate